Hey there fellas, in this video I'm going to be teaching you a step-by-step trading strategy that you can use today to start consistently profiting in the market, right? Now, let me set the proper expectation coming into this video that it's not a holy grail. There's no such thing as a holy grail in trading. You're going to have losses. You're going to have losing streaks. You're going to have drawdown. Heck, we're just coming off of one, right? If you've been following me for a bit and you're familiar with my work and you're in the Discord, you know, like, you're going to have losses. It's just part of the game. But you can have those losses, you can have those drawdowns, losing streaks, and you can still be consistently profitable. It's because if you're trying to avoid that, folks, if you're trying to avoid that, well, you're going to be looking forever, right? You're going to be in that hamster wheel of just shiny objects in them forever if you stay in that mode. So I just want to say that like right off the jump at the beginning of the video to set the proper expectation going forward, okay? This is a working strategy on a platter. Step-by-step rules. It's very simple. And by the end of this video, you're going to have it, all right? You're going to have that framework to work off of. Now, if you've been here for a minute, right, you know where I'm going with this video if you are a part of the channel, but you're going to get more examples of CC in play. And if you're new to the channel, if you just found the channel, then, well, you're going to have a strategy. You're going to have a working strategy on a platter, right? No marketing gimmicks, no sales pitch here. I'm just giving you free game. I'm just giving you just pure knowledge here, all right? So if you do enjoy the video, well, actually, another thing first. And if you do want to learn more about this, you know, once you get to the end of the video, you learn the strategy and you do want to be more active trading this, I do highly recommend you get in my free Discord chat, because I plug all this stuff real time in my free Discord chat. What you can see is down here. See this? Mike's analysis. So I'll plug everything in Mike's analysis with the scalping deals in here. So real time, no hindsight. Everything is plugged in here. So if you do want to learn more about the strategy as well, you need to be in the free Discord chat. There's a link to that free Discord chat in the video description below. Okay, all this stuff plugged beforehand. It's going to do you a lot of good seeing this stuff play out with us real time. Okay, so without further ado, let's get right into the strategy. I'm going to go over this right here. We're going to go over a few different examples, and I'll also, I want to go over some losing examples too. Again, because I just want to set that proper expectation. I don't want to just go over only the trades in this video that are just spectacular, right? Because that's not the reality of trading. You're going to have some stuff that fails. Okay, so this can be used in Forex. This can be used with gold, for example. This can be used with futures. This can be used in crypto, okay? It can be used anywhere. Doesn't matter what you trade. Doesn't matter what you trade. You can use it anywhere. I'll make that very clear, all right? We're going to go over gold here, though. So you can see what I plugged right here, real time in the chat. Gold, 1 hour bearish CC confirmed. So let's go over it. All right, so here's step number one. Step number one here. Be taking notes. This is a bearish CC deal. We'll go over bullish CC deals too, so you can see both sides of the coin. But step number one, you want to see, this is a 1 hour bearish CC deal. You want to see a strong close beneath a previous candle low. What I mean by that is, you see how this candle right here, this 3 o'clock candle, okay? Yes, I'm in London session, but it can be used in New York session, okay? You see this right here? It had a strong close beneath that right there. You notice that? That candle, this is where that candle closes, not right here. That's the absolute low that it trades. We don't go off that. You probably heard the saying, the body tells you the story. The wicks do the damage, the body tells you the story, right? See how that closed beneath that candle low? That is what you want to see. That's conviction. That's your CC, okay? So whenever you have something like this, and by the way, it also needs to be in a downswing. When I say it needs to be in a downswing, it needs to be, you need to have had a swing high form prior. So for example, highest on the middle, lower high on the left, lower high on the right. It's in the downswing. All right. So it doesn't need to be like a fresh swing high, but it needs to be in the downswing. Okay. So you see how like this thing is curling lower in a downswing, and then right here you get a strong close beneath that candle low. That's what puts it on my radar now that it's a CC deal. But I need to see a few other things take place here. Okay. I need to see a few other things take place here. What are those things that I need to see take place here? What I need to see take place here is I need to then go to my 15-minute. So if it is a 1 hour bearish CC deal, what I need to see happen next is I need to see 15-minute boss liquidity taken. Okay. And I need to see it come up into a 15-minute premium. Okay. We already know what our PT is going to be, folks. What is our PT going to be? Our PT is going to be that right there. That's the PT. Because it's always going to be, if it's a bearish scenario, it's always going to be the low of the candle that had the strong close. What you want to see happen next is you want to see it take out 15-minute bots of liquidity. When I say 15-minute bots of liquidity, all I mean is a swing high. So for example, our next swing high is right here. I need to see that taken. But what if it creates a new one? Can I use that then? You can. You're just going to use the next swing high that's created, okay? Or that you have. So you can see price, and I also need a premium. Where would a premium be on this? Whenever you are drawing out your Dylan ranges, what you're going to do is you're going to take your Fibonacci, okay? And you're going to take your Fibonacci from the high that grabbed a previous swing high. So what I mean by that is, you see like how this right here, grab this swing high right here. That's liquidity. Highest high in the middle, lower high on the left, lower high on the right. That right there, right after midnight, came up and it took out that high. So that is always how you're going to do it. You're going to take whatever high, the next high that did that, to the low of like the candle that created that CC. So you see how it's already above 50%. You can scratch that off the list. You're good on that scenario, but you still need the 15-minute buy side. And it doesn't matter the order that it comes in. It doesn't matter if it's in if it comes up into a premium first or if it takes out the buy side first. You just need the premium, and now you need the 15-minute buy side. Okay, doesn't matter the order that comes in. So you see what happens. What happens is it creates new liquidity. You see right here, highest in the middle right there. Look at my cursor, because you go by the absolute high when you're with the boss liquidity pool. It doesn't matter that this is a green candle right here. Highest in the middle, lower high on the left, lower high on the right. That's ample to use for your liquidity pool on the 15-minute. So now we have a 15-minute premium, and we have that swing point, right? Yeah, after you get that sweep, it sweeps that high right there, barely, just slightly. If you look, actually, if you look closely, it did. It just barely did it, but it qualifies. So you see how it swept that? It pierced that high right there. So you got the premium, you got the buy side. You know that right there is going to be your target, the low of that candle. The next thing that you want to see is you want to see 1-minute confirmation. Go to your 1-minute chart. When I say 1-minute confirmation, I mean the fair value gap, and you want to see the strong close beneath a short-term low. So fair value gap is right here. If you want to learn a little bit more about fair value gaps, then I'll leave a link to my video on fair value gaps in the video description, because you want to see this on your displacement leg. All right, so I'll leave a link to that in the video description too. There's a fair value gap, and you will see a strong close with a short-term low right here. See that swing low? Strong close. That confirms the shift. So as soon as that happens, you can hop in it, and this is a 1-to-1 deal. It's 1-to-1, but as y'all know, or the newer folks don't know, but the folks that have been following along know that like you'll have full losses, of course, but they'll also have like a lot of losses that'll be smaller losses because of the adaption rule. But here's what you're gonna do: 1-to-1. Oh wait, hold up. And I'll go over adaption rule. See that? That's how you approach it, 1-to-1. Whatever gives you the displacement at, slap the 1-to-1 on it. You can just let it work then. So your PT is the low down there, and you're just gonna kind of let this thing do its thing. Let it chop around. See, handled, right? Cleans it out, and that's the CC deal. Again, I want to go over an example of adaption rule. Okay, so no, nobody on YouTube, or very few people on YouTube, like to show when stuff doesn't go in their favor. Like I know a lot of people just want to show the perfect trades, right? The trades that just have flawless follow through, and only show those trades. But I don't want to do that because it really sets you up for like improper expectations. So I'm going to show you what to do in this scenario. All right. So I had this on Thursday, 16th. That strong close beneath that candle low right there. It's just slightly, but I had it in there. So you guys know the drill. The profit target is going to be that low of that candle. I need to see what happened though. I need to see 15-minute buy sell taken, and I need to see the 15-minute premium. Okay. So where did the next liquidity run happen? Like what I mean by that is like, where do you want to see, like where you want to draw your Dylan range? Right here. Why? That high right there, grab that previous swing point. That was the absolute high. So that's why we use this one right here. And you draw it to that low right there. So I need it at least 50%. Right there, it gives you that 50%. So that qualifies. And I also need 50-minute buy side taken, which is right here. It takes out that buy side. Okay, and it does all of that. Now, I had this trade because it was given the confirmation very late, so I figured I probably was going to have to apply adaption rule on it, but I still took it anyway. Because rules are rules, right? But I figured I probably was going to have to. But I got everything that I need, and it hadn't had the strong close yet into the next candle, so which we'll go into here in a moment. But look right here. You see, like I had that box that I had the premium, and then you see like right here, you see that displacement. I got that strong close, you see that short-term low, the swing low, and I got that fair value gap in there too. So I mean, I have like, I actually got the fair value gap up here. It's fine if it happens earlier. It doesn't matter the order that it comes in with the fair value gap and the strong close, doesn't matter. So I got confirmation. Okay, my PT is down there. I have a 1-to-1 stop on it, just like the previous, but this isn't one that you would take a full L on, because you see like right there into 4 o'clock, that candle closes like that into 4 o'clock. So you're going to apply adaption rule whenever you have a strong close above the previous candle high. So you see how that right there is the high of that candle, that the bearish CC candle. It closed above that into the previous in the next hour. Whenever that happens, you'll get out of it. Even if you don't have a full L, you're going to apply adaption rule and you're going to get out of there with a small L. Okay, sometimes a small win depending on where your entry is. Sometimes it'll be a small win, but you're going to get out of there. That's adaption rule. Okay, very important that you understand that if you're going to be trading CC, that's the adaption rule. And another thing too, by the way, in this case you use that candle, but it goes like, cause sometimes what you'll see happen is like price will take out the candle, it'll fail to displace, it won't close higher, so it's still valid. And then into the next candle though. It's like, for example, say that didn't happen. Like, say that didn't happen in the 4 o'clock. You didn't have a strong close, right? Let's just pretend you didn't. Let's say it respected that high. You could stay in it. But let's say into like 5 o'clock, that next candle comes up and it has a strong close above this candle. You always use the previous candle, is my point. So in this case, it's this one. But if that didn't happen and we come into the next 1 hour candle, you would use this one. And then use that one. So you get what I'm pointing at. Like you always could use the previous candle. In this case, it was this one, but you always could use the previous candle. So would have been an L if you took that where you got the displacement, but it wouldn't be a full L. All right. And here's an example of Bullish CC. Right. So this is USD CAD right here, which is the last thing that I plugged on Friday. Right here, 1 hour Bullish CC. I see it right there. It's in an upswing. And that candle right there has a strong close above this high right here. See that? So we know we want to run out this right here. This candle high. That's going to be our PT. What else do we need to see happen? Now this one, it actually didn't have the 15-minute, but I'm still going to use it for an example. Here's a good example from Friday. So like you see like right here, I had this 15-minute sell side. And sometimes you're not going to get it. Sometimes it'll just barely miss it like that. And it's part of the game. It's going to happen. But it's a confirmed setup. Like whenever, or it's a setup when I have that strong close. But I need to see that taken. I need to see the discount. You got the discount. So it comes down below 50% equilibrium of that range right there. So it's in a cheap marketplace. And then once that sell side's taken, it becomes valid. And then you could look for your confirmation on it, which would be the 1 minute displacement, the fair value gap, the strong close. See what I mean? Sometimes it'll just barely miss it, and that's just part of it. You have to kind of embrace that. That'll happen sometimes. See? But I bring up that example because I just wanted to show an example of like what a 1 hour would look like with a strong close right there. You see what I mean? Has a strong close with that previous candle high. Boom, runs it out. Okay? And also to show you that with that lesson, that like that's going to happen sometimes. Sometimes it's just going to barely miss your level. Sometimes it'll come down to a discount and it won't give you a liquidity run. It's part of it. It's going to happen. No system is perfect, but you're still better off with the best results waiting for that liquidity to be taken, for that 15-minute on the 1 hour to be taken. You're just going to get your best results by doing that. Okay? But those are the rules. It's very simple. step-by-step rules. There's very little head scratching to it, not a lot of moving parts to it. And that's how you're going to execute, folks. All right. Again, if you do want to learn more about the strategy, I highly recommend that you get in the free Discord chat. There's going to be a link to that in the video description. And yep, I'll see you on the next video.